Hello traders, Gary Wagner here, approximately 8:30 in Honolulu. It is the 19th day of October, Wednesday, and this is the daily report for gold. We have gold continuing to trade under pressure this morning, currently trading off about $14 or $15 in the cash market, just coming off $16.40 per ounce, $16.45 most active COMEX December. We do have a market under pressure at this moment. Traders, from yesterday's broadcast, we talked about the fact that we pulled profits. Conservative traders got in 1640, got out 1671. Traders who peeled off in multiple positions took half of their positions off at 1671. And then you were able to peel the other half off. We did get a rally as per my email. Take profits at any rally above 1665. We got 67, 66 prints yesterday. We are all flat in the market except for our November gift. And our November gift, of course, is we're all still holding on to 1625 puts. Now, they expire on Friday. Don't get me wrong. We have very little time, but we have a market $15 to $20 away from the strike price of that option. Hold on to it. As I said, I will send out a special email if we see a drop in the market and if that drop allows that option to go into profits. That wasn't the expectation. We put that on simply to protect ourselves and give ourselves a $15 risk on that last trade. First chart I do want to look at today, 240-minute chart. Candlestick, it is in Henkin format. And what we can clearly see with this chart is we talked about a couple of things yesterday. The first thing we talked about is really this tight range that it's been trading in. High 1694, low 1586. That's what I have on this Fibonacci retracement. And in terms of different areas, when we run a retracement from the low to the high, what you can see is that 61% move took us to this extreme low. This is 1627. Now, the market has recouped. However, as you can see, small-bodied candles, and they are red. We are still in, I believe, a sell mode. Where will the market go? Well, the first thing is to test 1640. That's the 50% retracement. Let me darken that up for us, traders. There we go. So as you can see, in terms of retracement areas, as we said, this retracement runs from the bottom. That low, call it 1588, high 1694, 61%. Our current print is 46, but this low at 1640, that would be an area that I believe the market could absolutely retest. If it cannot hold there, it will probably go back and retest 1627. What is my belief right now? The most logical thing that I believe we're currently witnessing is if in fact we are in a B, and that B wave, which is primarily a corrective wave during a correction, so it's a bullish wave. If we get this as our 1, 2, and then possibly our 3, that's one possibility. However, we have to see the market significantly show us some support in this area. We saw it 1627, but it has been waning as of recent. Traders, you can really see the kind of drop we're looking at when we look at this is the spot market. This is a daily chart, and you can see that it is clearly straight candlestick. It is clearly trading on its lows right now under pressure, and in terms of significant areas that we want to see this market hold, just broke through 1640. It's now at 1639. You've got this one area right in here, these bottoms, and that's going to be right at around 36 to 37 basis. The spot month right in here. We'll see how the market reacts. If it cannot hold that area, the next real support, of course, strong support, is going to be 1600. Now, as I said, traders, we're holding on to the 1625 puts. Let them expire either worthless or in the money. We'll talk about that if and when that becomes something that is a strategy. In other words, if they're not just going to expire worthless. Quick look at the Standard & Poor's, traders. When we do look at this, we've got this real strong band of resistance. You can see that right in here, right around 1220. You can see we do have some downward pressure today. We have had this kind of teeter-totter, up day, down day, up day. Now we're into a down day. It is like a vanilla wafer, or multiple layers, I should say. And traders, for our final chart of the day, it is another daily, it's spot month, Elliott wave, as well as Fibonacci. You can so clearly see on this chart, reason for me kind of ending the day here, this kind of, I'll call it a wall, like the old Phil Spector wall of sound. Well, this is a wall of resistance, 1683. You can see multiple occasions it tries to take it out. Simply put, it cannot. My belief is always that a market that cannot make new highs will go ahead and try and make new lows. We will see, but when we look at this marketplace just in terms of the straight sell here, the bottom that it found, the move back up, and this wall of resistance, we really want to look at the possibility of it going 50 to 61% in this area right here. And that was the chart that we looked at just prior to this. Of course, this weekend, we have a major meeting going on in Europe to discuss the European Union shore up the banking and sovereignty debt crisis. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.